morning, TheoTrade. This is Corey Rosenblum bringing you your Theo Nightly video for October the 3rd, 2018. We're talking commodities and specifically levels and big moves that happened today, for the most part, in bonds, crude oil, gold, the dollar, and the U.S. equity market. We only have 4 grids on the page right now because we can't show 5 easily. We'll talk about the dollar in a moment. But this is the hourly charts of our quad market grid. These two, gold and crude oil, we're all looking at futures, are commodity markets. ZN can also be ZB. And that's going to be our bond market, US Treasury bonds and notes. And then ES, of course, is our futures, or the US equity stock market. Now, we do have a persistent short-term uptrend, daily chart uptrend, weekly chart uptrend, monthly chart uptrend on the equity market. But it's pushing up into a resistance. 2950 is our key spot marker inflection point. For the short-term S&P, 2920 is also an inflection point to watch. We'll talk in this video short-term and then a little bit longer-term equity plays and levels to watch. But on your hourly chart, we have been playing between roughly 2920 and about 2945. Any breakout beyond that, especially beneath 2920, opens up a short-term play toward 2900 and eventually 2970 once again. Now gold, over to our right, GC, has been in a sideways trading range, a rectangle. Its midpoint or magnet is about 1205, a little short-term high or resistance just shy of 1220, and the floor of support beneath about 1195. Anybody playing gold on the upside, downside, or the short-term frame can use these reference levels to play toward and away from these levels, with about 1205 being considered our magnet or fair value. And that's essentially where the price will go up above, then go back toward, go down beneath, back toward, down beneath, back toward, etc. It's not that the magnet is special, it's just that a spot that is containing price action between the resistance and support levels. We'll again go to the daily charts momentarily. And for crude oil, some of us are starting to trade crude oil here at TheoTrade, and we do have the same logic with our equity market planning, level spots markers on the anchor chart or the daily chart that also comes into play on crude oil's daily chart as well. And we trade retracements, pullbacks, or other strategies as crude moves toward or away from our daily chart levels. Crude oil tends to be correlated with the equity market such that whenever equities or stocks pull back, crude oil also pulls back. When equity markets rally, crude oil also rallies, but it's not a one-to-one. Crude has been a little stronger than the equity market and is reaching higher highs, mainly this week. Last week into this week has been extremely strong for crude oil. It has broken above our daily chart 73 per barrel resistance level and is traded up to and above 76. The one little fly in the ointment is the bond or treasury market. It has been in a persistent downtrend, daily downtrend. It's hit key inflection pivot points, bounced up a little bit, and just recently collapsed to the downside. That's something to watch as bond prices fall, yet yields rise. All of this in the context of a rising equity market. Now, bonds and equities, not always, but generally go opposite each other. When equities are doing well, there's a competition. Risk on, risk off. And typically bond prices do poorly in rising equity markets in general. Of course, not always. Now, we can jump these charts to our daily grid and take a look at our other levels from the anchor charts or the higher time frame. The S&P, as we've been seeing, is going through range contraction, swing compression, and lower volatility. Sure, higher highs, higher lows, rising moving averages. All these are uptrend components, but they are reaching an apex or a spot where something has to happen. Something's got to give. We think it's going to be a pull to the downside, but of course be prepared if that doesn't happen, and that would trigger on a break beyond 2950. We do think equities are overbought, overextended, and ready for at least a little spike in volatility. That means downside action in October. That's your S&P futures. We'll take a look at gold and how that compares. Gold has been on a downtrend for the majority of 2018. It stagnated here, but then once it broke beneath our 1,300 per ounce level, that set in motion a $100 swing liquidation, sell activity, and downtrend range expansion. That's given way currently to a range contraction period just about our 1,200 level. Remember that magnet, the midpoint, is about 1,205 per ounce. That's a spot we're watching very closely for any type of break in the future above 1,220. That's going to be a bullish breakout or play to the upside, or anything that takes place under 1180. But right now, gold is in a chop, range contraction, and bounce back and forth environment. Taking a look at crude oil. Remember, equities have been in an uptrend, with the exception of the first part of 2018. So has crude oil. Now, equity prices went stronger toward the mid part of 2018. Crude is playing catch up. So we're seeing higher highs, higher lows, and a persistent uptrend. Strong movement to the upside, even parabolic, on relatively high volume, just recently in crude oil. One thing about commodity markets in general is that they do tend to trend stronger or more powerfully or more persistently than equities do. S&P 500, 500 companies. Crude oil, just crude oil. So whatever economic factors or fundamental factors or supply-demand imbalances can cause these prices to go in trend mode a little more than equities can. That can be appealing on the intraday or the swing charts. Again, our hourly chart shows persistent uptrend, breakouts, higher highs, and a short squeeze once crude oil broke above our 73 per barrel resistance high. That is a breakout, but it is consistent with the ongoing uptrend. Bonds, just the opposite. Taking a look at the 10-year note, we had a support pivot, support bounce, roughly 118. We can move it up a little bit to get that low, and we can see that we also can do a duplicate drawing for a midpoint. The midpoint for bonds, roughly 119, 120, these are just simple levels. But that sideways pattern has given way today to a high volume and a high range expansion breakdown. This is something to watch very closely as bond prices push lower, bond yields push higher. So take a look at our TNX, that's Treasury yields for the 10-year note, and that has burst strongly above the 31 level, and that 31 level refers to 3.1%. In this case, 3.161 is the roughly 10-year Treasury note yield. We were looking for this level, roughly 3.0. The 3.0 level is a critical resistance ceiling, and the expectation was once the market breaks through it, it can break through powerfully. The Fed continues to raise rates, and this is affecting the shorter term, now the moderate or the midpoint in the Treasury market. So do watch your Treasury notes, TNX, here in thinkorswim on a movement beyond 3.1, 3.16, and anything higher. Remember, that's going to be exactly opposite to ZN and ZB. Downtrends in motion there. And finally, traders, we'll take a look at $DXY. That's the US dollar index, not a tradable futures product, but the index itself. So $DXY. It has been in a persistent uptrend for the bulk of 2018, stalled, stagnated, went sideways roughly June to present, and now we're seeing a power swing off the 94 support pivot. This has been a persistent multi-day rally with trend days and gaps and future bullish action in play. We will be watching the top of the range, and it's roughly 95.6. We can see a resistance rectangle pivot at just above 95.6. That little rectangle, the dollar index broke through it today. Remember, Treasury yields also broke a resistance level. Of course, bond or Treasury prices broke a floor of support. All of this, again, in the context of a rising equity market, rising crude oil, flat to sideways gold, and of course, everything else taking place on the global scale. Watch these intermarket levels. Even if you don't trade these contracts, take a look at the intermarket relationships between them and what it means for the future. This is Corey Rosenblum for the Theo Nightly video for October 3rd, 2018.